Good morning, everyone. Kalimera, everyone. Have a beautiful day. I hope everything is gonna be looking better for you. It's the 12th of June today, okay, and it's Thursday. Good morning, Kalimera, Yanni.
Good morning to you too. Good morning to everyone, and hope you have a great day like us. We have a bright sun. Posede anebje rosen,
Yeah, the sun
rising.
has risen.
Yeah, rising, and it's a beautiful day.
It's a beautiful day.
How about you?
Hmm.
How about you in lovely Cyprus?
Cyprus is getting hot, man. It's getting hot. Um, we've got 27 degrees right now. It's 10 o'clock in the morning.
Wow, wow.
So, anyone that wants to get a tan, you're more than welcome to come down to Cyprus.
27 you have.
Already, yes. Yes, sir. That's correct. 27 degrees.
Actually, you are better than me. I have 28.
Well, so we've got the same temperature right now. So,
Oppo.
right. So, ladies and gentlemen, good morning, Kalimera. Welcome to another stream. I hope you're doing well. We're going to put some vibes in the background. Right, today we're going to do things differently. Today, John is going to start his TA first. Just for a
Me?
change. Yep, just for a change.
Why
Start
me?
with your. Start with your. There's nobody else here. It's just you.
Why me? Why me? Why me? All right. So,
So today we're going to start with John. So John is going to start with his XRP, and then later on I'm going to come back with the Bitcoins and the Ethereums and the majors. So John, the stream is
great.
yours.
Thank you very much. So, hello from me also. How are you? Hope you're doing great. Good morning again. What do we see over here about XRP? XRP has lost ground, as we see over here. Didn't manage to get above that trend line we have over there. Also didn't get that liquidity that's staying above. Lost that 50% of RG levels that's sitting at 2.2988, and now it's going for that imbalance that we have to the next level down below at 2.22. I'll keep my balance over here. I have my marks. I'm expecting the price to get that imbalance, and also I'm waiting how it will react inside that imbalance over here. Claim that imbalance and then turn around and try again to claim that 50% RG level and then go even higher, or it will go even lower to complete all the liquidity that stands above down below over here, and then go to the lowest level at 2.14, and then to make the turn and go even higher for that liquidity pool that's sitting above at 2.37. For the moment, I just wait how XRP will react. I was long on XRP. I closed my position right after I saw that lost that 50% over there, and now I'm just waiting what exactly XRP will do. When I saw my confirmation, when I saw some strength from XRP that is turning around, then I will go my entry for long. For now, because it's close to that level over here, to that G level over here, also to the imbalance, I will not do any rush movement. I'm just waiting. I'm observing and waiting for the correct time to enter my trade, to enter a trade. As we see, we have a downtrend for the moment. Sorry, 1 minute. Okay. That's all for XRP, guys. I also have hype we have good news on hype over there. What we saw, that liquidity pool that has taken now is acting as a support. Has not lost the ground, has not lost that G level that's sitting over here at 39.9, and now has built it's building strength. Let me delete this one because that liquidity pool has claimed, has taken off, and now we are good to go. As we see, it's sitting above that level, building strength, and now we're expecting hype to go even higher. We saw that hype. What do we saw? That we have a new all-time high on hype. We have a new all-time high. Was we expected that small turnaround over here, that the small correction, and now we're expecting what if it has enough strength and go even higher. Let me bring those. Let's change the template. What am I doing over here? Let's change the template and see. There you go. We have the new levels. Thanks to our director, we have always the next levels for any coin that we see and observe and we chart. Right, as we see, that's the G level over here, and then we have the next one at 47.6. If we want to trade between those two levels, what do we say? We break the levels in half on four levels, and in half, whatever you want. As you see, the 50% of new G level over here, the smaller one, is acting. It's accurate. We saw that rejection, and now we'll see some support over here and go for the second try to claim that 50%, build strength, and go even higher to the next one. Also hype, actually for hype, I'm expecting to see a correction until this level at 39.9. When hype comes over here, then I will take my entry and go for the 50% and even higher for the next one. That's all about hype. SPX, what we saw, it's still sitting above this level at 2.6, has built strength. Let me go into the 90 minutes time frame. There you go, more details. What do we say? When you go even to the lower levels, you have more details. What do we see over here? Has lost that level over here 1, 2, 3 times. Actually, we see some wicks. We don't see big candles. We see only some wicks over here. The price went down, but closed exactly to the G level. Had enough strength to stay above. There you go. One confirmation over here, second one over there, and now we're expecting SPX to take that liquidity over there. When reach that liquidity pool over there at 2.80, we will see some correction because liquidity has taken, and then the price is making a correction, and then is building more strength to go even higher. Like hype we saw before, we'll see to take that liquidity and stay above, and then this zone that is the liquidity above this G level is acting as a support to go even higher. Let's see actually SPX. Come on. We will see. If you take that liquidity over there, then you will see a new all-time high on SPX2. If it breaks that 1.80 and go even higher, we have a new all-time high on SPX2. That's all about SPX. ENA, it's sitting. Come on, take the brush. Okay. ENA is sitting over here, didn't have enough strength to go even higher to the next level over there. Now it's on the level on 0.33, lost for a moment, and then came back up, and now we're expecting how it will react over here in this level. If it keep it as a support, or and go even higher, or lose it and take that liquidity that is sitting, this small liquidity is sitting down below over here. Maybe we'll see, actually, because we have a small liquidity over here, maybe we'll see a move like this, take that liquidity and go then and turn around. But for the moment, as we can see, that ENA, it's in a downtrend. You see it's bouncing in this to the downside channel, actually. Το έλεγα καθοδικό σωλήνα αυτό, εντάξει. It's bouncing, but it's going...
It's a parallel channel, yeah. I mean, καθοδικό σωλήνα. Είναι παράλληλο κανάλι, το λέμε.
Ναι, but it's in a downside, not to the upside.
Yeah, in a downtrend.
Downtrend. So we wait what exactly we'll do in this G level ENA. Actually, we can mark this with a line. Actually, let me extend that over here. There you go. There you have it. If it stays over here as support, or if we take that liquidity and then go again to go even higher. Not that much movement from ENA, actually, for the moment. I also have Tau. There you go. What do you see on Tau over here? We have in this trend line that I have marked from way back. Actually, I have it from 7th of December. And what do we have over here? Let me mark it. We have 1, 2, 3 times, almost 4 actually, 3 times rejection. Didn't manage to break it, that trend line. And now it's going, okay, there you go. And now it is making a correction, and we're expecting what exactly it will do on this G level that we have over here, 384. Maybe it will lose that G level, make a support in this trend line, claim again that G level, and then go for the next try and go to the 50% that we have over here, that is at 456. You can see the prices, or it is small. Let me bring that. There you go. I think it's much better. My confirmation about Tau. It's actually to wait exactly how it will react over here. If it gives me actually we can trade also, because if we have Tau over here, this trend line, make that as support, we can trade this movement. Let me from here to up there to the next one, to the next level, actually, for the 50%. But if we have confirmation that Tau make that support, stay above that G level over here, and break also this trend and go even higher for the 50%, then we have also we see Tau that has enough strength to go even higher for that liquidity pool that stays above. Let me show you how that liquidity. There you go. That's why I mark always the liquidities, because I have my spots for the price that is after. There you go, my liquidity pool. I have marked, and then where Tau I'm expected to go. Now that alts start to moving, as we saw, actually it started the movement of the altcoins. I have my two liquidity pools also that, as you can see, the second one it's exactly to our G level at 600. Let me check Tau has what's all-time high of Tau. It's 744. As you can see, if we stay over here, what do we see? We have a low, we have a higher low, turn around, grab those liquidities. I'm on a weekly time frame right now. Okay, we have plenty of time actually. Make a support over here, make even another higher low, and go then after for that liquidity that stays above and make a new all-time high also in Tau. But on the weekly, we have plenty of time. Now we see on the daily, and actually I'm seeing on the daily 4-hour time frame and 90 minutes time frame. Actually, it starts moving to the upside, I think, Tau. As we see, actually, for the moment, I'm on the waiting. Also, with every coin that I see, XRP, Tau, to see how exactly they will react. I think that's all from me.
Right, okay, good. Right, you heard the man. Good morning. Yeah, you heard the man. Good morning, everyone. Welcome. This time we started doing things a little bit different because John has another appointment to go to, so I gave him the lead. John, I thank you very much.
Thank you that you gave me the lead.
No, it's all right. That's why we're here. Remember, we adapt. Okay. Remember the 3 key areas that we need to take action, and then we need to analyze, and then we need to adjust. So we just adjusted now. So let's go have a look a little bit on Bitcoin, guys. Let's have a look and see what was going on with Bitcoin. That was our focus area. That was our range. We could see that, because the price was sitting above the G level, I was on going longs from these areas, trying to go long, from these areas, trying to go long. But look at that. That was our marker, number 1, number 2, number 3. We got 3 strong rejections. It could come and break up for the 4th time. You could, right? But you can see that the price lost the 50%, right? Lost the G level. That was the time. It lost the G level, got out, got rejected from the G level, and then it broke out from the range. And since then, Bitcoin is going out of the range, and is under the G level, so it's going short, so it's going down. So my open trade for long, it got invalidated since that we got outside of the range and failed to come inside the range. So since then, I'm out from the trade, right? I'm not interested. If I lose my G level and never come back to reclaim it, then there's no reason for me to insist to have an open position and risk myself longer, right? No. We lost the G level, so we lost 109. So let me zoom out a little bit. So there it is. This is the 90 minute, right? So we lost the 109. And we're on our way down, and perhaps the next target is going to be 105,795. Yesterday, we did say that usually Wednesdays and Thursdays are days that the market is pushing towards the downside, right? It's like a correction phase from the Monday and Tuesday. It's a general observation, right? The daily open, I have to update it to today's open, so let me go to 3 o'clock my local time here. So 3 o'clock must be around here. Let me zoom in a little bit for the people that they're looking for the ranges. So there it is. Right, let me extend. Let me do this quicker. So let's do 600. That's about all right. It's not too bad. 600. Let's do this one. There it is. quick updates. And let's bring the weekly one forward. There it is. So you can see now that the price action, it failed to break the Monday high. Okay, for the people that they're following the Monday high, it failed to break the Monday high. It never touched the Monday high. It lost the 3-month, the quarter level. Okay, the high of the quarter, it lost it. It came down. It came down to 6 months. It lost that one as well, and it's back under the Monday 50%. Right, so that is a huge correction. People that they pay attention to Monday ranges, there you have it. You failed to break the Monday high, so the next targets are the levels lower. Technically, if you're looking at the Mondays, so from Monday high, you're targeting the Monday mid, right? Monday open is way lower, so we're under the Monday mid. So the next target is going to be the weekly high, and if it wants to continue that, that downtrend, then after the weekly high, you're going to have to see if it's going to take out the Monday low, right? Usually, when they talk about ranges, the Monday ranges, usually the highs and the lows have been revisited, okay? And that's why it's the weekly range, technically, right? So you have the Monday open, you create the Monday high, you create the Monday low, and then by Tuesday, Wednesday, you're trying to attack the Monday highs, and then by Wednesday, Thursdays, towards Friday, you're trying to target the Monday low. And Friday and the weekends you see a bounce usually, right? This is the idea behind it. It's not always going to be 100% that it's going to play out the same way. Okay, there are some moments that by Tuesday, Wednesday, the market is in a trend, so it's out of the Monday range. But for this week, we can see that it did not manage to break Monday high. It's coming down. It targets the Monday 50% and it's under as well, right? So now the next target is Monday low, and in between that it has the weekly high. Okay, for the people that they're looking for the ranges. Now for the bigger time frame, look at that. Once again, we got rejected on 109, 140, right on the range. But the good news is that we're still above the golden range. Remember the golden range? This is the golden range, the range that we have between the two golden lines. Okay, that's not associated with any ratios or anything. It's just the golden range that we have here because of the golden lines. That's all. Okay, so we have a huge range. So the price is sitting above the range, but it cannot break 109. Okay. So 109, you can see here that it's acting as a resistance. We cannot pass through yet. Let me have a look on the CME gaps. Look what happened. Right, look at that. We have a close under that CME gap. So that CME gap now it's been mitigated. Right, it trying to close on Wednesday. Just a little bit missed it, barely missed it. Right, and we have a new gap forming by Thursday. So I'm gonna close that. I'm gonna make it that as green. Okay, it's mitigated, and now we have a new gap between these two guys, and that is gonna be yellow because it's still ongoing. Right, we don't know how it's gonna look by tomorrow, and I'm gonna move that line further down. There it is. Here's the price. So I'm gonna leave this on a standby. Okay, so we have a downtrend. We have 3 daily bearish candles, right? That candle did not manage to close above that candle, and that candle is printing way under the previous candle. So that is a bearish daily candle, right? So it's heading towards the downside. Maybe now we're going to target the CME's lower. Let's see, right? I just wanted to let you know that the one CME gap is officially closed. We have an opening and close under that. So let's see what about the new gap. What's going to happen with the new gap? Okay. Now, Ethereum. Look how that Ethereum was so strong that pushed all the way from 2,749 in the 50s and pushed all the way up to 2,874. That is a red line. Okay, this is a significant key level. It's the 50%. what do we know? We know that we're going to get rejected. And this is what exactly happened. We got rejected, okay? So, people that were going long on Ethereum, I hope you took profits, okay? That is a very, very nice event. You took profits. Obviously, you knew that the first time you're going to get rejected. This is your TP zone. And if you reversed it, if you took a short straight away, depends if you are intrading or day trading, then the next target was hit as well. And you can see that we found support on 2,749. Okay, currently Ethereum is sitting 2,769. So guys, if you following the G levels, all right, and you respect the G levels and you take action according to the G levels, you should have 3-4 solid good trades on Ethereum the last week, you know, since Monday, right? It moved. So, you know, Ethereum is performing better. It's moving better. It's doing more moves than Bitcoin, right? And speaking of which, that's why I'm looking at this chart. Look at that yesterday. What did we say yesterday? We wanted yesterday to see that we're going to claim a G level. And this is what happened with ETH and Bitcoin. Breakthrough, come back, retested, and pushing out. Look at that. And we are in a big range. Okay, also we mark the big range. So we want to see that Ethereum against Bitcoin, that is going to break that range and continue to the upside. Okay, it's been now, you know, I'm sure that we'll be talking about this more than 2 weeks, that Ethereum is on the move. So I hope you don't sleep on it. I hope that, you know, you take the opportunities from Ethereum that is moving, right? It's a good sign that, you know, we flipped the resistance. Look at that, for how long it's been resisting these areas, right? And now we flipped it. It broke through, came back, retested, goes up, come back, retested a bit higher. So now we want to break the range and go higher, right? So here we are about Ethereum. Okay, that is beautiful. Let's have a look on the alts. You can see that the alts stopped exactly on the next G level, right? Found rejection on our G level that we placed it here, and it's coming down, trying to take out this imbalance. And let's see if it's going to stop here, right? Which is a 50%. So let me find the 50% of that range. Just mark on the 50%, the breakdown of the 50% down here, and you can see that we have a 50% here. So that's our 50%. Okay, I'm going to leave that just a small line in the middle, so you know that line that sits here in the middle is a 50%. Okay, and we want to find support, right, for the alt and start attacking that G level of 12 cents, right? So yeah, obviously Bitcoin pulled back, and that influenced the rest of the altcoins to follow, right? And that is the average chart of altcoins excluding the top 10. Pepper should be doing a little bit the same thing with the rest of the alts. You can see that he's trying to stay above that G level. We lost it a little bit, and let's see if we're going to find support somewhere and start turning around and trying to attack once again to get above and hit that 50%. Okay, that's it from the majors. Now is the time for you guys, if you want to chart any token. So you take your time, think about it. If you have any questions, any doubts, anything that you want to ask, okay, it doesn't need to be always with a token. Anything that you want to ask. John wants to say something, so yep.
We do have stages from Tesla and what else?
Stelios was looking on Tesla and Google.
And Google, yeah.
Right, so Tesla, here we are, guys. So Tesla yesterday turned around, so to say. Okay, this is a 45-minute. Once again, you can see that even the G levels in stocks, right, you can see that it's respecting the G level, fighting a hard time to go through the 50%. That is the 50% line between the two ranges, right? So stopped it a little bit, flipped it, and now it's moving to the upside. Got a little bit of rejection. Okay, there's a imbalance there. So it's gonna get a little bit influence to the downside. Maybe we're gonna retest the 50% and then let's see if we're gonna get a continuation to the upside. So technically, Tesla is in the range. Okay, why I say this? Because that was a major rejection area. So that was your first range. Okay, that was the bottom of the range, that was the top of the range, and now we flip a level and have new range. This is the bottom of the range, this is the top of the range, this is the bottom of the range. So it's bouncing right between levels, G levels, and these G levels kind of acting as ranges, right? And you know, it's so, I don't want to be, over talk about myself. I don't want to talk about my strategy or my system, or I don't care to get the fame, right? This is not the point. The point here is that if someone is an investor and he wants to look on a higher time frame, like the daily or the weekly, right? Look at that, even the weekly. Look at the weekly and have a look and break down the levels with your G levels, right? With the CIA G levels, you can see that he has a plan. He has levels to work with and say, okay, this is the bottom, and start moving. And he wants to target on a higher time frame. Okay, he wants to target from one side to the next side, nothing in between, right? The between is just a trouble. And you can see that the Tesla is going up, it came down, it's bouncing on the 50%, it's coming back, it found a new support, and now bouncing up. This is the view from the high time frame. Okay, even the monthly. Tesla kind of in a range. Look at that, bounce from the bottom, trying to stay above the 50%, got rejected, a little bit deviation, reclaims, right, breaks above the 50, hits the top level, comes back, hits all the way down to the bottom and pushing up. So yeah, it's like a ping pong, right? It's a huge range, but if you're a swing trader for the weekly, so to say, you can catch all these lovely waves. Okay, you can catch all these lovely waves. So smaller time frame, like 12 hours, daily, 4 hours, 6 hours, whatever you're watching, you can still work with it. You claim a level, the next target is your next level. It's trying to break up over the 351. It did not, it couldn't find strength to continue. It could not break the next resistance, 368. Again, a G level, a breakdown of a G level, stopped there, came back, lost the 50%, the 351. Look at that, came back, retested, and continued to the downside. Now it's bouncing. Look at this lovely wicks there, abundant wicks, push to the upside, retest, and push into the upside. The next target for someone that's doing a swing trading is still continue to attack the 351, right? It's gonna do obviously you're gonna have this kind of action until you hit the 351, but your target as a swing trader is to go from one level to another, right? The breakdowns is just for you to monitor the progress. So yeah, Tesla is looking good. Let me switch a little bit to Google, because that was another one that he was looking at. But I'm not sure on which ticker he was looking at though. I have to recall and go back and see. Yeah, I mean Tesla on not on crypto though. That's why I don't find it. Tesla, that's the one. And then on stocks, let's have a look on Google. I think that's the one. Was it in Nasdaq? I think it was in Nasdaq. Let me see. There it is. So Google was pushing again, and look at that again, in respecting the G levels multiple times, right? Rejections, support, and now it broke the G level. It's above 177. If we find support, and then we're going to continue to the upside with the next level. It's going to be 208. If you want to break down into internal G levels, just for you to monitor the progress, of course you're more than welcome to do so. And look at that, when you broke down even this is a 12-hour time frame. Look how Google is respecting the G levels, right? Guys, it's a frequency. Once you understand this is a rejection, this is support, right? Rejection. Let's hope that we find the support. Once you find a frequency, zoom out a little bit and say, hey, can I find an impulse, right? And a complete swing low, swing high, right? Once you find this, a nice swing high, swing low, this is an impulse, right? If you break this down, you get the G levels. And I mean, if I ignore that G level here, right? Just ignore that for a second. I'm going to hide it. And let's say that I took this swing high, this swing low, a different impulse. Let's say I took that low and this high, okay? Especially when you go into high time frames, it's going to be more easier for you to spot the swing high, swing lows. So there it is. That's my swing low. This is going to be my swing high, okay? Use the fours, expand, right? And for this example, what I'm going to do, I'm going to use the extensions for me to get levels above the 151. Okay, so let's say this is my last known territory. This is unknown waters. So let me enable the extensions. You can do extension 2, you can do extension 1. It's up to you. So let me reverse this. Right, why? Because I did a reverse apply. I applied the way of the tool, but it doesn't make any difference because they are equal distance. So you reverse it, the easiest button ever. And look that even that we enable the extensions, and then we go back to 12 hours, you can see that these G levels are still operating and getting respected. Right, there it is. You see that it's trying to break above the red line, did not manage to stay above. Boom, losing it, came down, deviation again under the 151, support 139, and then since then it's turning around and pushing to the upside. So again, you're cracking a frequency, you're cracking an impulse. It doesn't matter how far back you go, okay? Once you find a correct impulse, a solid impulse, then you can use it, okay? So let me get rid of that. We use the most, let's say, recent move to the upside. That still works as well. And let's bring the retracement, the tool, the Fibonacci tool. I have another one, there it is. These guys go together, there you have it. And that is another impulse, right? From this swing low to that swing high. Okay, and we see a huge correction, so we said, okay, that is a strong swing high. We're gonna break that frequency down, and look to the, look back to the history, and you see that is working. If you want to use the 8s, right, there it is, and just observe a little bit on a smaller time frame and see, is these, G levels, this price action is bouncing and respecting these G levels. If yes, then you're good to go, right? You're good to go. Nice and simple. And as I said before, it is not about, it is not the G levels that is going to make you successful. Oh, okay, we found the frequency, we're breaking down the levels. The G levels, the CIA G levels, are going to help you to understand support and resistance and the next future levels, because everything is running on algo. Okay, so everyone has its own algorithm that it runs, okay, by machines. So if you crack the code, we did this, the G levels, the CIA G levels, we crack the code visually, right? We put lines. So if we can find a crack the code visually and then put lines, where do we expect the next resistance going to be? Then automatically that is going to put you in an advantage against other traders that they're trying to guess. They're wasting all their energy and time trying to predict what the market's going to do. You don't need that. You have the levels, you have support and resistance, you have future support and resistance like levels because that 146 is going to be always there. That 114 is going to be always there. Why? Because you're going to just extend the lines, right? You're just going to extend the lines. Put that to 1,000, and then, you know, the price in the future, right? It's going to, let's say that the bear market is going to come down. It's going to bounce somewhere down here and then turn around. So that 83, because you marked it because of these levels, so to say, right? If the price is going to come back, I can't use the market today. So if I come back in the bear market, you can see that these levels are going to be still valid, right? So your future, right, in time, as time progresses and goes, these levels, they're going to be still acting as support on the way down and as resistance on the way up. Okay, and if you're getting out of the range, let's say that Tesla is really progressing, all you have to do is just enable the extensions. Go max, right? Let me go to max, style, reverse, put the lines above, and now you have all the next future support and resistance all the way up to 803.
To infinity.
Into infinite, right? So if Tesla is going to go up to 803, you know when to next expect support and resistance, right? And people that they love, let me hide this word for 1 second, and people that they love diagonals, we have a solution for that as well, right? And I'm going to use the pitchfork, okay, which I have. There it is. And yet pitchfork is working with 3 points. So you need a good impulse to the upside and a good correction, right? Something that happened. This is not yet, I mean, I can use it, right? I can use this low, this high, and this is the correction because I see that it's breaking structure. It needs 3 points. But just to make it more interesting, let's go back to the past and say, hey, this is my low, this is my high, and this is my correction. So I need 3 points. 1, 2, 3 points for the pitchfork to work. So let me grab my pitchfork. Let me go to a high time frame to help me out a little bit here, right? To get the proper, easier for me to mark the points. That is a low. I'm going to the highest level here, and now I'm going to the lowest level as a correction. And that is my pitchfork. Okay? I'm going to lock it. And now people that they love diagonals and trend lines, go back to 12 hours. Right, let me kill that a little bit, that guy here, hide it, so I don't want to confuse you. Right, and look how the diagonal pitchfork, people that they love trend lines, diagonal trend lines, you can see that the price action is bouncing and reacting on the pitchfork. I'm going to leave that screen here just for 1 second for you to observe.
Also, touching the lines. Also, is reacting perfect.
Yeah. I mean, this is a 3-day time frame. And you see that the nominal, the median line, right? The median line is the 50%, the trend line of the pitchfork is acting as resistance on the current chart. And you see that, you know, if I go to the 12 hours, you get more details and you can see, you know, the price candles more accurate reacting to levels, right? Look at that, look at that, look at that, look at that, right? Look at all these, look at that, all these, right? Look at the bounce here, the bounce, the bounce, the bounce, the bounce. Look at these levels, right? So if you find visually a way to crack the code, then you have no surprises. The more you zoom in, the more it looks more horizontal. But yeah, it's a trend line. Okay, this is the 12 hours. Do you want to go down to 90 minutes? There you have it. Right? There you have it. Do you want to go down to 6 hours? It's up to you. There you have it. Right. So guys, you know, it's not the lines, the visual lines, that are gonna make you successful. I mean that pitchfork goes forever, right? But the negative thing about pitchfork, look at that, it's infinite. It goes and goes and goes forever, right? And the only negative about the pitchfork is that it doesn't have a static price tag, right? That line that acted as a rejection in this price, it was 177. The same line further down the line is 180. So this is 177. That's supposed to be a 7 now. So 177, right? And that is 180. That's the only negative thing about the pitchforks. But the diagonals, they don't have a fixed point on price. And that's why I like horizontals, because I can speak about the price no matter the time. But pitchfork is progressing. It has an angle, right? So the price can be, updating. It's dynamically updating, right? But nevertheless, that shouldn't be a problem. It shouldn't be a thing for you to get discouraged using pitchforks. If you understand the law of trend lines, all right, you can use it. Look at that. Rejection, rejection, rejection. It broke. It did not manage to stay above. Right? Look at that. Support, support. So that red line is acting resistance here, and now it's acting as support. Right? So you treat it the same thing, the same way with parallel channels. It's just creating you multiple parallel channels, and you just go from one channel to another channel, one level to another level. Like with the G levels, you go from one range to another range. Right? So the good thing with the CIA, that what we teach here and what you learn, and you're going to use the tools, is that whichever market you go in the future, let's say you got fed up with crypto and you want to leave crypto and you want to go into forex and you want to go into stocks, whatever reason, you can take these tools with you and say, hey, I got the G levels, I know how to apply them. And we found the easiest tool that's going to be always available, which is the Fibonacci. All you have to do is change the numbers, and you know the numbers, you know the sequence, and then you just need to find a good impulse. Find an impulse, right? A heartbeat of that chart, a good spike, a swing low, swing high, and then you say, I gotcha. I got the pulse, I got the frequency, the swing low, swing high. That's all I needed. Boom. You apply the tools, you break things down. Now, is that going to be your success? No. That is a tool that's going to put you in a very, very good spot, in advantage compared to others. And say, now I break things down, I've got my supports, I've got my resistances, and also I've got my future levels, right? Higher or lower, it doesn't matter which way it goes. What is going to make you successful is your strategy, your conditions, how to your protocol, when you're gonna get engaged into a trade, when you get in, when you get out. That is your success in your action, right? Your action, it means, hey, did you break my resistance, my G level? Okay, I take long. That is my action. And then you're gonna analyze what that price action is doing. Are we finding support here? Is it moving? Yes. Okay. So we're going to the next G level. And then you're going to adjust. What are you going to do on the next G level? Take profit. That's what it is. For you to become profitable is for you to take action according to the TA. And what is going to make you super successful trade in the long run, the alpha and the omega, which is your super one weapon, is your risk management. Which means, hey, this is my trigger for me to get in, but also that is my validation point. If that price goes under, it's invalid because your plan was to go higher. If that goes lower, you don't need to wait one level lower. And say, hey, tight stops, minimum losses. But if the winds are going high, going and run, I don't care. My next level is going to be my TP. Now, are you going to close TP 100%? That is up to you. That is up to you. If you're happy with the results and the returns, close it. If you want to continue and be like a swing trader, trying to target an entry as a day trader, but keep it as a swing trader. You're progressing, right? You're analyzing, you took action, you got in, you analyze, and you see that the trade is going very well, and then you adjust and say, hey, I'm going to move this trade from day trading to swing trading because it has potential. It has a momentum. Why should I cut myself short or early, get out from the party while the price is moving? So you can move to swing trading. What are you going to do? You're going to take like partial profits and say, hey, once we're going to reach to that G level, I'm going to take 50% out. Okay? In case it goes lower, I've got 50% on my hand cash for me to find the next support. Once I find the next support and it's bouncing, I put my cash back to compound. Then it's going up to the next G level again, to the same that got rejected before. What are you going to do? 50% out immediately. Boom, out. It's claiming. Nice. Did you find support? Yes. Put it back. Compound. Next target, the next G level. What are you going to do? 50% out. That is a strategy, and you are adapting through your analysis that you do every day, and you keep going until you start losing levels all the time. You're losing one G level, you took the 50% out, and then you lose that second G level, and you're like, uh-oh, that thing is reversing. I lost 2 G levels. Out. Done. That's what, I mean, the better, if you keep your entry price the further away from the price action, it's safer for you to just let it go. Let it go. If your entry is down here, for this example, your entry is here, right, and the price is up there, that creates a safety distance. So if the price is going to come down, there's no way that you're going to get triggered, right? Here's your entry, okay? Now, by doing DCAs, if you find support and then you re-entered here and the price action is going to be here, again, your entry level is going to be somewhere there. Again, you have a distance, safe distance away from, entry with a price action. And that's the trick. You want to have your entry as far as possible from the price action. So you're going to be always in the win. And that is when you know that you start this market early. Going back in 2022, so to say 23, when you understood that Bitcoin is going to the upside, this is when you decide to say, hey, 50%, 60% of my capital goes in right now on a 2x. And then you got the remaining cash just for you to add on later, for you to DCA. Right? Or you can say, I'm going 80% in, on like a spot mentality, on 2x. The 20% is just for me to play around with futures, small tokens like, altcoins. But 80% is on Bitcoin, it's moving. I know that I've got 2 years. And let it run, and say, hey, you analyze, things going well, price action is moving away from your entry, you're out of danger, let's increase the leverage from 2x to 5x. And keep pushing. And that's all. Right, now we're just waiting to see when we're going to start seeing things falling, and we're going to do the same theory, the same conditions, the same, we're going to apply the same strategy on the way down in shorts. And that way you're trading both directions. Majority of the people in the retail section, they're going to come when markets are going to be booming, right? When the market's going to crash and everybody's going to run. Okay, they say close it, take your profits, get out of here, come back in 2 years. You don't need to do that. You're just going to go on short. And let it go down, let it go down, let it go down on 2x, 3x, you don't care. You know that everyone run out, escaped. You just say, hey, it's just going to be a bumpy ride. I don't care. I made my money on my way up. Let's put something on idle and let it run and go down free fall. I know that's going to go down. So I'm going to bet against it. I'm going down. Let it go down, or super small leverage. That means you can escape the hunt from the exchange and let it run and let it go. And that's it. And that's it. That's the trick. That is what's going to make you successful. And then by the time that the market is turning around, guess who's going to see the reversal first? It's you. It's not the retailers. The retailers are all away from the charts. The retailers are waiting for the social media to hear the news that the market is turning around. By the time they're going to hear it, the market's already turned and moved. Everybody pay attention on Bitcoin after that it broke the previous all-time high, was 69k. The market turned around at 15, but a lot of people, the people that were still inside the market on the chart, they took action after 25. Let me demonstrate that. Weekly, zoom out a little bit. So the people, you know, when the crash happened and then everyone was coming down, right? When Bitcoin hit under 40, that's where everybody panicked, everybody left, right? 2T levels, they left, right? They never looked back. Bitcoin is a scam. Bitcoin hit 15, turn around, right? It broke structure. That was the previous high that got rejected once again, and it broke it and it flipped it. So people that were inside the market and still looking, they see a flip. Resistance, I want to say. Resistance as a rejection, resistance and rejection, and it flipped it as a support. People that they were watching the markets were still in trading, no matter what. They would start talking about 25 and say, guys, this is it. We're turning around 25. A lot of people, retailers, they took action once we headed to the all-time high. And you can see by the size of the bars. Look at the candlesticks. How nice and clean that is. Because no one was paying attention. No one was around. Especially retailers. Right? When the news said that Bitcoin reached the previous all-time high, look at that mess. Look at that choppiness. Why? Retailers came in. They start. They remember. Oh, do you remember Bitcoin? Yeah. Well, it broke the all-time high. Well, it's on the same area. It's on the same area. A lot of people shorted here. You know who? The people that they call trapped here, and they were waiting in spots for so long to recover. That was minus 80% for them, right? But when they recover, and when they see Bitcoin coming back to the same all-time high, they did not believe in Bitcoin. They say, oh, phew, it took me 2 years for me to break even. Let's get the fuck out of here. Retails came in doing the opposite. Oh, look at that. Bitcoin is on the all-time highs. It's strong again. And look at that momentum. We're going up. They're trying to go up. The big boys that have been trapped for 2 years, they're trying to go down shorted, and that's a mess. And after that nonsense for some time, from here to there, let's say when it broke the range, the 68, it took them 252 days. Right? 6 months to clear this level. And after that, look what happened. It went above 100, psychological number. It went above 100, it went bananas again. What happened? Boom, comes down. It bows them. Now, once again, they're going bananas because we're breaking the all-time high, the previous all-time high. And that's why I don't have huge hopes more than 122. If ever Bitcoin is going to claim 109, then it's a good possibility that we're going to reach 120, 122. That's it. But that's it. I don't expect anything higher than that on this cycle. Then since, after that, I'm going to just short it and go down. That's going to be the next phase. Like this one here, it's going to come down. And when Bitcoin is going to find, let's say, the next resistance, on the way down, it's going to be resistance, right? When we're going to find the next support, so to say, a term that we all know and understand, I don't know where it's going to be. It's going to be 68, it's going to be 55, it's going to be 42. I have no clue where it's going to stop. But I've got all these levels for me to monitor, right? Once we're going to see that is gonna flip around, and then we're gonna see that it's breaking structure, right? That resistance is gonna turn to support. Then we're gonna be the first ones to see that the market is shifting, that the bear market is over. We stopped at 55, we're breaking 68. That's it. We're reversing. That was rejection. That is the support. We're moving, and we're gonna be the first ones to say, guys, the market's reversing. The new bull market is starting. But guess when the rest of the people will start talking about Bitcoin? When it's gonna break 109. The retails are going to see Bitcoin at 109 because that was the previous all-time high, or 122, so to say. So from 68 to 122, it's you and me that we're going to trade. The retailers, they're going to come after 109 or 122 according to the last all-time high. It is that simple. So you move away from the chart, you're going to miss the next bus. Obviously, there's going to be another bus if you start, staying and waiting patiently on the bus stop. But you just need to catch the first bus to just be in time. Otherwise, you're going to be running late. Even if you catch the second bus or the third bus, you're still going to get to your destination, but you're going to be running late. With troubles, right? You're going to work, people say to you, oh, you're late again. Right, all the negative things, which means you're chasing them in the price and you're trying to catch, and then you're trying to go high leverage, and then you get trapped, and then you get burned, and blah blah blah. This is all the negative. When you get in on the late bus, it's in the humanity mentality, the the mindset, the psychology trading is like, oh, let's make up the loss with high leverage to catch up with the first bus. There's no way. The first bus is going to arrive first. The second bus is going to arrive second. Unless the first bus is going to break down. But this is not happening in trading. The first people that they're going to jump on the first bus, they're going to arrive first. It's like the train, right? All the trains are going in the same direction. They all have the same, they have their own timetable, but they have the same track. So the first train is going to arrive first, the second train is going to be always second, and the third train is going to be always third. All of them are going to arrive at the same destination, but the timing is not going to be right. The first guy that's going to be on the first train, he's going to be early, he's going to go into his office, he's going to have a cup of coffee, he's going to be relaxed, he's going to plan the day. The guy who's going to arrive on the second train or the third train, he's going to be late running, no time for him to make a cup of coffee, everyone's going to look down on him, and he's trying to rush in to start the work to make up the loss, and he had no time to align and get prepared. He's going to jump into his desk and trying to catch up with agony and anxiety. And also you have a supervisor or a manager looking down on you, threatening you to be sacked because you're late. You see the negative effect? The negative psychology is on everyday lives. So yeah, next time we're going to be early. In any market. So okay, I don't want it to take it too long. Let's have a very, very quick look on Render. Render once again got rejected on $4. Went all the way down past through $3.91. Where's the next level? Next level is, where is it? $3.70. Right, $3.70. Let me bring this guy a bit closer. He's too far away. 1,000? No. Let's come down to 600. No, we want you even closer. 500. No, I don't see you yet. 400? There it is. There you are. Let's do 450.
Director?
Yes, sir.
I have to go because my time is
right. Okay.
out for the moment.
All right. Okay. Say your goodbyes to our fellow agents, and then I'm gonna.
Goodbye to all of you. Have a great day to all of you, and you, director, also. Thank you for the lead for today.
Mm-hmm. You're more than welcome, brother. You're more than welcome.
And see you inside of Discord.
We'll see you in Discord, guys. Yes, we're expecting Wednesdays and Thursdays that it's going to be a cool day, a cool down day, like pushing back. You can see that the alts are pushing back. We've seen the others chart that is printing a correction, even virtual, it's trying to break above $2.18. It's a red line. You can see that it lost it and coming back, pulling down. It's the same story. We don't want to sound boring, but we do not change the TA. We do not change the approach. Okay, I've seen others, and I say this with not in a negative way. Okay, I see others that they start the TA doing one way, and then 3 months down the line they implement something new, and then 3 months down the line, 6 months down the line, they implement something new tools, new blah blah blah. So you can see they are not standing on the ground. They're still searching for something better. So they never believe their own systems, right? So it's like a fashion, right? They think that the TA is like a fashion. Okay, it is not. Trading in the market has been going on for hundreds and hundreds. Forget thousands, which it does, because trading is one of the oldest occupation, if I may say, right? Trading is not new. So you see all these people trying to come in with a new gimmick, with new tools, new strategies and indicators and blah 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 and AI. This is all noise. This is all BS bullshit, right? And you can see that these guys are trying to find something new to amuse their community, to amuse their customers, right? And say, hey, now we've got a new system, we've got new tools, it's going to be better, we're increasing our win rate, blah blah blah, right? No. We need to keep one system, a solid system, believe it, and then after that we need to be very strict with our conditions, right? The system is not going to fail you. What is going to fail you is your decision to jump in let's say prematurely into a trade because you're ignored or you're trying to bend the rules. So once you start bending the rules and breaking the rules, okay, it has nothing to do with your system, right? Your G levels are there, and it's not them that they failed. It was my action that I decide. For instance, right, I'm going to use that as an example, that I tried to go long under a rejection point. Right, I was asking for trouble. I'm asking for trouble here. So if I'm trying to go long under a rejection area, right, I'm asking for trouble. But if I wait a little bit to be more patient, and I'm waiting to find support, and I get physical evidence, I see visually that I'm holding support here, I flipped it, then it's a good time for you to go long, right? People, traders, when they are approaching a trend line and the price is under the trend line, they act these as a resistance, as a rejection, so they're going short, right? That's it. We need to keep these as simple as possible, as easy as possible, not to overcomplicate it, because when I first started trading, even when I was back in crypto banter and the crypto school, and then after that sniper school, and then well school, and then well room and stuff like that, I was trying to find my strategy, my system. So I was using support and resistances, but I was doing it a different way. I was doing it a bit visually. So what I used to do, I used to go on a weekly time frame, right? And I said, okay, where do I see common, like big long price action that you could not go under? So that was my support, right? And then I said, oh, I see a strong level here, okay? And if I was drawing lines, I was doing visually, I was doing like horizontal lines, and I was going like this, right? And I was like, where do I see common touches, multiple touches? Oh, that's a level, right? And that was back then, a way for me to find common ground. I say, hey, that is a support, there's a deviation, another support. So that G level, that it wasn't G level, sorry, but that level here, my horizontal level here, is acting as a support. I see multiple price action respecting this line, So this is how I used to do it back in time, right? And now, I just, made it a little bit more, because that was one level. Let me demonstrate that. I was doing like this one horizontal, like here, right, for this example. Then I was doing another horizontal, and I said, approximately around here, and then another horizontal, and maybe something like here. I see something like that. You see, now all these levels, they're not equally distanced, right? So I was going visually. I say, I see multiple rejections here, another rejection here. Okay, that must be a significant level. I mark it $28. That's how I used to do back in time. And then I said, I need to find something that is more consistent. I was using these support levels, and then I was using the golden ratios, right? The Fibonacci tool, the 618. And then I came with a theory, again, in the crypto school, I said, guys, if we targeting the 618, what if we can target the future golden zone, which is the 1618, the 2618, and the 3618. That again, it was my idea, right? And let me give you that example. Let me clear this a little bit. It's all right for the link. Excuse me, link. Let me do this in a new token, right? Look at that hype. It's beautiful. So let me hide this a little bit from hype, right? And let's say that we got a new swing high, swing low. Okay. So let's say that was a swing high, swing low, right? And then extend this a little bit. And I said, okay, if everyone, right, is respecting and expecting that it's going to bounce on the 618, which it did a little bit, but it did not turn around, right? It was bullish. It was breaking through. You see, this is where you get a Fibonacci failing, that, it did not turn around on 618, okay? But what if I can target the future 618, 1618, and the next one, 2618, and the next one, 3618, and the one further up, 4618. So I was doing that on the same concept. All the G levels, the golden levels, right? All the golden levels, the future golden levels, and you can see, because it's on a sequence, you can see that the every time the price goes apart on a different percentage, right? They're not equally distanced, but they have an algorithm. Okay, so that is a 90% from 618 to another. This is a 48%, right? From this level to this level is 32%, right? And from this level, right, to this level is 24%, right? Even that the Fibonacci is rising, which means each line, it goes greater and a bigger distances. Look at how the percentage, as time goes by, you can see that the percentage is moving in a smaller direction. Look at that, right? Even that the lines, you can see visually that the lines grow larger between them, but the percentage, look at that, is not increasing, right? 90, 48, 32, 24. How bizarre that is, right? Okay. How many candles would you say to allow to give a confirmation for level holding? 90-minute time frame, one candle. You can do that on the 90-minute. And break this down. Okay, which means you can have a few more candles, like 4, 5, 6 candles on the 15-minute time frame. But you need to be careful a little bit, because sometimes on the altcoins, because they're a little bit volatile, you may have 1, 2, 3 candles on a 50-minute, and then you see that the price is shooting and it's moving, and you start waiting. Oh, I have to wait for 9 candles. No, Don't wait for 9 candles. If you see that, you need to take action as soon as possible. You see that it's breaking and claiming a level and start moving, take the action, grab the momentum, because that momentum is not going to last for long. Okay, majority of the times the token's going sideways. Majority of the time the token's going sideways, right? So 80% of the time you're going sideways, and then the rest 20% they got a trend. So that trend line is not going to last for long, so don't waste your time. Okay, so that was the G level, that was the Fibonacci tool that was using back then. Let's say let me use that impulse right from here to there, extend that a little bit to the right. Right, so you have a level, a G level, right? And you say, okay, the price went up, and you see that it bounced on the 618, right? But it turned around on you, okay? That's where a lot of people, traders, that they took that impulse, right? And they say, okay, the price is going to come back on the 618, and from this level we're going to start going long and long and long, and this is it, we're turning around and we're going to break the all-time highs, and boom, it goes down. This is where a lot of people bet on the 618. Again, the Fibonacci levels are psychological tools, right? It's a psychological level. Why? Because people that they're using the Fibonacci, everyone is waiting for the price to come to the 618 to take action. So it's a psychological tool, right? It's not a magic tool. It's just telling you that everyone that's using, the Fibonacci tool, that everyone is going to wait for the golden pocket, all right? And this is where you have these lovely impulse to the upside. Then the market's coming down. You see that it rejects on 618. Everybody goes higher, right? Everybody goes long because they believe that they're going to continue the impulse, right? Swing low, swing high, swing low, then we're going to break the high, right? And then everybody goes, the golden ratio, and off it goes. It never touches the previous one, and it comes down and fails, and when it was past the 618. And I'm telling you that if people maintain that 618, a lot of people got a second position there trying to go long, and that failed either. So that's all. Just be careful. Use one system, right? Use one system. So when I find out that I need to find something that is more consistent, something that is more powerful, something that's going to be working more accurately, this is where I came with the G levels. All right, and look at that hype here, for example. Right, look at that hype that is stopped on the next rejection G level. My known area was these two guys here, that swing high and that swing low, right? So that is 100%. That is my zero. That is my extensions. And look at that. That is your future extension level. That hype got rejected. It got rejected here. So once you find a system, you don't need to change it. You don't need to change. We don't need to change. We just need to stick to our conditions. We buy on support, we sell on the resistance. That's all. Keep doing the same thing over and over again. Right, okay, that's it. I don't want to keep you very long. That's it for today, guys. I hope you had a good day. I hope you had a good session. I hope you got something out of it. You see that we're getting rejected 109. It's coming down a little bit fast. Okay, this is the 12 hours. Let's do the 90 minutes. There it is. We lost 109. What do we say? You lose a level, you close a trade, you open a short. You're going open in direction, right? And it's pushing to the downside. Look at that imbalance. There's a high possibility that it's going to target 105. Nice and simple. You want to break these G levels down, to monitor on a smaller time frame, because you want to do scalping or you want to do intraday and you want to go high leverage for a limited time. You're more than welcome. break this level down from this G level to this G level. Use the CIA G levels breakdowns, and there you have it. All right, and you can use. I'm trying to be as accurate by eye. Okay, just a little bit visually. And let me break this into dotted lines. Right, there it is, dotted lines. Make it a bit stronger. There it is. Go smaller time frame, 15, and look how Bitcoin is respecting the breakdown. And you can do scalping. 5 minutes. The same thing. Oh, we lost a G level. It comes down. It got rejection on the G level. Violation. Deviation. And you're like, oh, right. That doesn't look good. Comes back. Lost that G level. What are you going to do? You're going to scalp that with a 50x to the next G level. From here to there. What is the percentage? On the way down. From here to there, it's a 0.78. Alright? So 0.78 times 50. That's a 39% move down for you. How long did it took? From here to there, it took roughly 1 hour and 20 seconds. 20 minutes. Let me do this a little bit more accurate. From this candle to this candle. 1 hour and 5 minutes. That's it. Right. If you have a token that it moves, a trend, use it. It's not going to last forever. Okay. Now you see that it does not violate that level, and now it's finding support. You're like, is that it? So if you want to go long, right? This is a 5 minute time frame. I see a small range. I see a small cluster, a build up, right? Go down to 1 minute. What are you going to do? And say, hey, you know what? This is my cluster. You break these, right? You break these, and then my target is going to be the next one, right? My validation is going to be under the G level, because if I see the price going under the G level, that's it. I'm out. I don't need to risk more, right? Because you're on a high leverage anyway, so that distance is good enough. I say, hey, that is my validation. That is my trigger, right? If you want to be super strict, you can say, hey, I don't want to lose the 50% of the range. Because if I go under the 50% of the range, that is bearish. Bearish sentiment, so to say. And this is how you can do scalping on any time frame. But, you know, if you're using high, let's say leverage, make sure that you're using a good token, right? Like a token that is going to be solid, right? If you're afraid of 50x, do 30x, do 35x, right? But you know, you just go less than 1% away, less than 1% away, which is 0.78. And you're going to be trading for 1 hour, and that's it. Right. Have a lovely day, guys. Enjoy the rest of the day. Okay. Remember, the G levels are not going to fail you. The G levels are there to help you to find support resistance. It's your conditions. It's how you're going to use them. What is your action? That is what's going to fail you. So, you know, stick to the conditions. I'm going in when and if. I'm going in long when I found support. I'm going short when I find resistance, right? My next TP is going to be there. And according to your plan, it's up to you how much you want to use. Nice and simple. Right, that's it, guys. I have to... big love to everyone, guys. But the bubbly, see, can't be on the stream because I see that you reply on the behalf of Butter Bubbly. Right, okay, cool. I hope this is fine. Right, okay, that's it, guys, for today. All right, I don't want to waste any more of your time. Have a lovely day. It's Thursday today. The weekend's around the corner. Look at that condition. Look at that. It's playing out for you. There it is. You're breaking out of that range. What are you going to do? Long until that next G level over there. You're going long up to here. And see how that goes. Right? If it's going to come down and it's not respecting the 50% or not respecting the G level, you cut it loose. Right? Because there is a possibility that's going to bounce from here again. Right? But you want a breakout, you want to see a support above the range, that is going to be super bullish. And it's like, okay, I'm in. Right? But now it's moving and it has, let's say, a momentum. Don't waste that momentum. Right? Take it. It does have a very tight stop loss to say, hey, I want you, right, not to lose that 50%. And if the price is going and break structures, let me do you another. Guess what I'm going to do now? All right, guess what I'm going to do now? There it is. You keep on breaking. Right, look at that. You just claim that level. Look at that range, that cluster. Right? You broke that? Good. You're breaking these? Your stop loss is going to be here. You're breaking and going higher? Your stop loss is going to be here. You're breaking, you come to these areas? Two options. Either you're going to move your stop loss to 108 or you're going to take TP and get out. And done. Simple, guys. G levels are there to help you visualize and see the levels, support and resistance for you to make the decision. What I'm going to do when the token is going to reach there. It's going to help you for you to make an action before others. That's all. That's what it is. You just want to see Bitcoin now holding above this level. You claim this level, look at that. Rejection, what do you expect? Support. Okay, I'm going. The next one, this one, tick. Did it claim it? Yes, off we go. Rejection, it cannot go. It's like, uh-oh. So I close this trade because I cannot see that it's going to claim it. It's losing steam. And then you say, it's down to your guts. If you're feeling that it's no gain, close it, take the profit, whatever that's going to be, 20%, 20%. If that's going to be 39% up there, but 20% down here, it's fine, take that 20%. Find another trade later. You can do this all day long on the 1 minute, but make sure you can't use YouTube for 24 hours. Wow, what did that happen? What happened to South Africa? They get banned in South Africa. Right, okay, so that's it, ladies and gentlemen. Okay. Oh, messaging. Okay, DC accidentally unsubscribed and subscribed on the channel. Oh dear. Okay, ladies and gentlemen, that's it from me today. Okay, take care, have fun, trade safe, remember the conditions, don't break the rules, mark it down, have your TA nice and solid, and you're going to be doing fine. You're going to be doing fine, I promise you. Right, take care, guys, have fun, I'll see you soon. Oh, by the way, I forgot about that. There's not going to be live trading today because it's the final, how do I say this now? The schools are closing down, so the kids are going to do like a play at the school. So it's going to be the final play of the school to celebrate that they finished the year. So my daughter and son, they're going to have a play at the school, so I have to be at the school. So I didn't knew. It's something that I plan Tuesdays and Thursdays to do live trading. So today I have the school play, so I can't go. Something I didn't knew before when the school play is going to be. And secondly, I missed yesterday's live trading because one of our agents, right? Not yesterday's, on Tuesdays. I missed the live trading because I was just about to get on. But one of our agents, I don't want to say name, had a problem. And I had to deal immediately. So we start talking and communicating. But it was, let's say, a person that it was in a bad state. Okay. I had to spend some time to clear things out. So I spent a lot of time talking on a private call. So I apologize that I missed the 2 live tradings. But there are good reasons. Right, there were good reasons behind it. One, I was helping an agent or one of yours guys, one of us, right? An agent that he needed support, and today just the school play of the kids, right? I keep the priorities. We need to keep the family, right? Family events. All right, okay, ladies and gentlemen, big love, and I'll see you soon. I'll see you tomorrow. Take care.